Hey traders, it's Hima here, and I've got a skinny dip for you, looking at how to roll equity index futures contracts. Today's Tuesday, September 15, 2020. Now, important reminder before we take a look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this session. So today, being Tuesday, September 15th, I actually rolled the ES contract to the next front month already. But I have a detailed look at how to do this using a past example. Again, this is the same process that's used every 3 months, so here's your tutorial on that. All right, welcome back. So I am going through how I decide what day to actually roll contracts on the E-mini S&P 500 futures. So this is from a day trading perspective as well as a swing trading. For day trading, it's a matter of what front month you're trading. And if you have a longer term position, it's a matter of rolling your position to the next contract. So I'm going to focus here on the decision of when to roll. And it's up to you to check with your specific account holder, brokerage, etc. regarding trading on that new contract. So here I have open the screen for the ES M20. So this is a June 2020 contract. Now, today is Tuesday, June 16th, 2020, and the rollover date was last Thursday, June 11th. So the rollover date is just a marker of when to start paying attention from the perspective of a trader. We actually use the open interest to help us decide when to actually move to the next contract. And normally this happens on the Monday or Tuesday or Wednesday following the rollover date. So on TradeStation, I can show you how I plot open interest. So here's the daily chart, and we go to right-click, Insert, Analysis Technique. And then if you just look for open interest, we just want regular old open interest like that. So hit OK, and then it plots. So you can see how there's been a sharp drop-off in the open interest of the pre-existing contract, and that's normal. Okay, it's dropped off the past 2 days. What I also want to see is a sharp rise in the new contract. In order to do that, what I do for the purpose of analysis is I first come in, and this is how I do in TradeStation. I copy this window. Then I'll make a new workspace. And to do that, you go to File, New Workspace. And that just creates a separate page here. And now I right-click, and then I paste the window. This way I have ES-M20 in one spot, and I prefer to actually put it vertical so that I can see all the information, the data, RSI power zones, and open interest. Now I'll paste again because the same window's on my clipboard, and then to the right of the quote-unquote old contract, I mean it's still trading, but that will expire soon. To the right, I put the new contract. So in this case, that's ESU20, September. And because it already has the same indicators and settings, I can now see that, yes, in fact, I do have that sharp rise. So I like to wait until I clearly see that there's a sharp drop-off and sharp rise persisting for 2 days in the new contract. And so this is usually the Tuesday after the Thursday rollover date. In the future, if the rollover date changes and doesn't land on Thursday of a during week, then the Tuesday rule obviously needs to be revisited. But I want to show you something. This is not saying that there's more open interest in the new contract. Notice the old contract right now has 1,784,640 contracts open, right, unsettled. And the new contract has 1,678,929. It's not a higher value. It's just seeing that steady rise. And in order to measure a rise, you need at least 2, ideally 3 data points. So in this case, that's the 11th, the 12th, and the 15th, which was yesterday. So now I'm going to go ahead and roll the contract forward. You can sign up at himareddy.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.